In the last week, I lost over $200 trading online. And overall, that has led to some big disappointments with my trading. And in today's video, I'm going to be showing you how I get past all of this, mashing up my trading psychology with ChatGPT and using it to help me figure out what my issues are with my trading so I can get better at it. So if you don't know who I am, my name is Chris and I'm with Trading with Chris. And if you're here, great. I'm glad you are. Make sure you subscribe and follow along because I'm sharing my trading journey as I go here. And I'm basically going to be showing you the trades I'm taking, what I'm doing, my winners, my losers, everything in between, and how I'm going to improve my trading over time. So if you're interested in that and you want to follow along, definitely do that. All right, let's get started. Now, first off, just want to do a couple of quick things here. Just talk about this week I finished up with Trade the Pool on my 14-day trial. Very good. It was a lot of fun. Didn't do very well with it overall. I think I might have done maybe a 20% with my consistency, so not very good. 2 out of 8 trades being a winner. I mean, not very good. I mean, a really big hit on my confidence this week, and I'm going to get into that because I've been spending a lot of time learning about trading psychology and how I could get better at that. And in this video, I'm going to be showing you how I'm using ChatGPT to help me improve my trading psychology so I can get better at trading and not make the mistakes I've been making over the last few weeks. And overall, I like Trade the Pool. I think it works great. If you're interested in trading stocks with a prop firm, it's limited risk trading, so you can buy into a plan. Like, for example, I'm looking at doing this $5,000 plan, and just doing the beginner account. So it's $59. I have to pass the eval, get a 6% target, and then I get a trade with a $5,000 account. I think that's one of the big problems with most traders. You can't trade with capital or anything like that. So, and if you don't have the capital, it's just hard to trade, to get into trading. So this kind of solves that problem. You get to do for $59, you get to do the eval, you pass it. If you lose more than I think on 2% or 4% overall, the max loss of 4%. So on a $10,000 account, you're looking at $400. So if you lose $400 on a given day, then you lose the account, and then you are out the account itself. And in the end, you don't lose $400, you only lose $59. So that's the benefit to trading with prop firms. So if you want to check it out. I got a link below in the description so you can sign up for it if you want and get your own free 14-day trial to try it out. So check it out, and I definitely recommend checking them out and getting a part of this. All right, let's move on. So this week's trading, well, let's just say it wasn't a lot of good stuff. There was a lot of bad stuff in this week's trading, and really a big hit to my confidence, honestly, because I think I had one out of, well, I did have some green trades, but one green day out of all this week, 4 days. So 25% on my green days, not so good. Just really kind of shook me to my core just a little bit. And I decided I've got to figure out my psychology a lot more. I've got to spend more time working on this. And I think that's where most traders struggle personally, because there's a lot of work that goes into that stuff. And maybe you don't understand it very well. I'm not the best at it either, and I'm learning as much as I can. I'm going to show you how to do this with ChatGPT and what I'm doing, and you can go ahead and do the same thing. Maybe you can input, you're struggling with some of the same things that I'm struggling with in trading, and then you can start to input those things and start to learn more from that as well. So let's go ahead and let's get into it real quick here. So this week lost $107 in July, but when you add the end of June with the beginning of July, we're more like $200 we lost in this week, $228 or something along that lines, plus the 128 I lost the week before. Just kind of really enforces the fact that I have to spend time focusing on something better. And that's where I've been looking at my results overall. I mean, I'm about a 1-to-1 risk reward, but my win percentage, 44% this week, starting July. My win percentage for the end of June, for the last few weeks of June, 17.65%. Terrible. Definitely got a lot of things to improve on here. I think I've been trying this new strategy with the VWAP and really trying to understand it a lot better. And I still haven't grasped entirely everything with it, but I'm getting better at it. So I'll show you some of the trades I did have here. So end of June was, I had a really good trade here $61.50 I had, but I took a lot of trades on some of those days. Like on the 26th, I took a lot of trades. I had two losers, really big losers, over $111 right there. And then I had a good one right after that, and then lost another $72. I think I should have just left well enough alone, taken the loss. And I'm having bigger losers too, so that's kind of one of the big issues I'm having as well. And then July, the beginning of July, took a total of 9 trades so far. Had some really nice winners. This $117.50 winner, and then $72, really good. These two right here, pretty mediocre, but not bad. I accept the winner when I get one. But then the losers, though, I had $350 in losers. I mean, when you offset that to the, $243 of winners I had for the month so far, just not going to cut it. My edge is trading on emotion and not trading on just having a clear mind and thinking rationally when we're taking trades. So that's definitely what I'm seeing here. And I'll talk a little bit about that here, how I'm coming up with these, and some really big reflections I've come across in my trading as well. So let's go ahead. We'll get into the actual how I've discovered and how I am using ChatGPT to improve my trading. And you can do the exact same thing here, and I recommend you do, because this is a lot of fun. One thing I will say though, don't import like any kind of information about your trade. Like for example, don't put like account numbers, your social security number, or any of that kind of stuff on ChatGPT, because ChatGPT does remember it, and I think one of the things that is interesting about ChatGPT is that, like, if I talk about, like, say, dating psychology here, and I talked about the VWAP wave cheat sheet here, it kind of brings those conversations across the lines, and does discuss those things. So it knows what I'm doing and knows what I'm talking about all the time. So it can bring information from different conversations into this chat, as well. So, but I just recommend that you do not put any valuable information like account information or personal stuff online, talking generalities and stuff like that. Just don't put, any important information on here, because it will remember that, and that's not a good thing to do. So, all right. So one of the things, so what I did is I just basically put this first prompt together, and you can copy this prompt if you want. You can see it on the screen here. And this prompt really is how I just wrote it. It said, "You are a day trading psychologist, and your job is to help me avoid typical trading issues that I'm having. My current issues are revenge trading, especially when I have a red trade. I tend to make multiple trades and most end up losing. Second, I have FOMO, fear of missing out, if you don't know what that means, especially when it comes to missing out on big trades. Third, cutting good trades too soon. I tend to do that. Potential, I often see a big winner and take it off the table without seeing its full potential. Sometimes I get up $40 or $50. I'm like, hey, I should get out. And then I do. And then all of a sudden it pushes up to $100. And I kind of kick myself and like, why did I do that? Finally, not cutting and losing trades soon enough, but rather just letting it keep going in the hopes that it's going to turn around to a winning trade. And oftentimes just losing more and more money. I want you to help me identify these issues when they come up and give me solutions to help me work through them, and put strategies for each of these issues in place and help me get better as a trader. Start by asking me a series of questions, one at a time. This is my cheat way I always do this. Start by asking me a series of questions one at a time to help me better understand the situation and design a plan to get me past these issues. So I always like to do that with ChatGPT. I like to tell it what I want it to be, and I always want it to ask me a series of questions one at a time to help better identify the problem and stuff like that. I just don't want it to create a trading plan solution, because it's going to be very general. I want it to get very deep into the weeds. So this is how I always do that. So okay, absolutely best. Based on what I've already know about your trading, I can already see a pattern. You've moved away from fast-paced small cap momentum, which I have. I used to follow Ross Cameron's strategy and all that. We're going away from that and moving towards a VWAP-based strategy. You're focusing on large caps, ETFs, and you're trying to limit yourself to high-quality trades per day, to limit to one high quality trade. And the strategy itself doesn't mean to be the biggest problem. Execution and emotional discipline are. The encouraging part is that the four issues you are listed are all related. They usually come from the same underlying problem, allowing emotions to override your trading plan in real time. And that's true. Emotions are taking over, especially after a losing trade. And we'll get into that here. I'd like to approach this the same way as a performance psychologist with a professional athlete. And that was pretty interesting when it told me that, because it's like, wow, this ChatGPT is so smart. It just says, hey, we're going to treat it like this. Instead of trying to be more disciplined, we'll build systems that make good decisions easier and emotional decisions harder. So, okay, we're already coming up with this strategy, and we kind of got a basis of what the strategy is kind of be around. We're going to use it to override our emotions. And so we'll identify emotional triggers, the thoughts you have before, during, and after trades, the solutions, where you lose control, rules that interrupt those patterns before they cost you money, and a daily routine that strengthens and disciplines over time. I'll ask one question at a time so we can dig into each area. So the first question is, think about your last revenge trade, the one where you lost money, then immediately took another trade that you normally wouldn't have taken. Walk me through it in as much detail as you can. Specifically, what was the first trade? Why did it lose? The thoughts that went through your head immediately after, and what made you decide to take a second trade? At that moment, where were you trying to make money, and where did you get stuck back in a loss? Looking back now, when did you realize you shouldn't have taken that second trade? Don't worry about making yourself look good. I'm interested in what is happening internally. Those thoughts are what we'll build the plan around. So, very good. So here's my response to all of this. The last revenge trade I took cost me $88.50. Right after that trade, I took a second trade that lost me an additional $22.50. I wasn't focusing on the strategy I trade and what my entry should have been. After the trade, I thought I would never make it as a trader, and thoughts started going through my head and that I'd never make it. I decided to take the second trade because I thought I could make back, and that the stocks was starting to move. Thankfully, I got out of the second trade sooner. The first trade is where I am focused on making money. It's right after that there's a scramble to make up for the loss. I realized it when the second trade was over and I couldn't name the setup I was in. That answer tells me a lot, and it's actually encouraging. So kind of like that. Okay. ChatGPT is kind of pumping me up here a little bit. The problem wasn't that you suddenly became a bad trader. It was that after the first loss, you stopped trading your strategy and started trading on emotions. So big reveal there. And I think one thing great about ChatGPT, it's not going to lie to you and pump you up and make you feel like you're really good, but it's going to tell you exactly what you're doing wrong. And that's what I love about this. It's going to take all this data and tell me, say, hey, based on what you're doing here, you're doing this, this, and this wrong, and you need to change this. Focus on these things instead. So here's the sequence I see. A normal trader, you're patient, looking for a VWAP setup, waiting for confirmation. Loss occurs, you lose $88.50. Identity threat. Instead of thinking the trade didn't work, your brain just jumps to, maybe I'll never make it as a trader. Urgency. Your brain wants to eliminate that uncomfortable feeling as quickly as possible. FOMO. Every little move on the chart suddenly looks like an opportunity. And that's true. Every time you take a loss, it's like all of a sudden I'm willing to jump in on anything now. Before that, I was willing to just sit there and look for the perfect setup. And now I'm not. And all of a sudden, I just took my entire trading plan and threw it right out the window. Rule abandonment. You no longer ask, is this my setup? You ask, can I get this money back? Second loss, you reinforce the original fear. So notice that the second trade wasn't really about making 2250. It was about trying to erase the emotional pain from the first loss. That distinction is important. The thought we have to eliminate, the sentence stood out. I thought I'd never make it as a trader. This isn't a trading thought. That's a judgment about myself personally. Professional traders don't think I'm a bad trader. They think trade number 37 didn't work out. And that's so true. Really good traders don't think to themselves, wow, nah, I lost a ton of money. Even some of the really good traders I know who lost $100,000 didn't turn around and say, well, trading sucks. I'm done. I'm not going to make it as a trader. And that's not what they're thinking. You're just thinking that trade didn't work and we got to work back to get the loss to get ourselves back on track. But we don't want to take it out on ourselves and say we're not a good trader. Those are completely different. Your self-worth becomes tied to one trade, and that's not a good thing. You don't want your mindset tied to that one trade. And that's something that I just didn't really know until ChatGPT told me that straight to my face and said, hey, you're making a judgment about yourself. It's not in your trading. You're making it about yourself. So that's a huge thing for me. So the first rule I'd like to adopt after every losing trade, before you can place another trade, answer 3 questions out loud. What setup did I just trade? Okay. Number 2, why did it fail? And number 3, can I clearly name the setup I'm about to trade? If you cannot answer question 3 immediately, you are not allowed to trade. So very important there. The rule directly addressed what you said. I couldn't name the setup I was in. That's the moment your emotional brain has taken over. And that was important there because what I realized is that taking the trade the second time meant that my emotions were in control, not my non-emotional state, where I just was thinking clearly and thinking logically. That was completely gone right after that trade. And it didn't take much for that for me to happen. So being honest, I mean, that was just right in the face telling me that you are trading emotionally, and it knows that. So I find that so interesting. Okay, I also want to create a circuit breaker. Now I'm thinking a circuit breaker, kind of like an electrical breaker that's designed to, when too much power goes into a breaker, what happens is it trips it off and cuts the power. That way you don't have fires and blow stuff up and things like that. And I'm not talking like a circuit breaker halt in trading either, like that. That's just completely different. A circuit breaker is going to be designed, since you already know revenge trading happens after every red trade, or pretty much, don't rely on willpower. Build a mandatory process. For example, after every losing trade, close your platform for 10 minutes. Stand up and leave your desk. Drink a glass of water. Write 1 sentence in your journal saying, my next trade does not have to pay for my last trade. And that's so important. A lot of times I will sit there and I'll think that, man, I got to make back the $106 I just lost. And then you sit in a trade till you make it back. And then what happens? You lose more and you lose more. Then return. You haven't lost your edge during the 10 minutes. You haven't lost your edge during those 10 minutes. What you're really doing is giving your emotional surge time to subside before you make another decision. So this is a very, very good, simple practice to implement and your trading, because now you don't have to worry about, you can kind of cut back that emotional intellect and just kind of let it subside, and then come back 10 minutes and then take another trade. Look for another setup, get your logical thinking back in place. Something caught my attention. You said your first trade is where I focus on making money. That suggests your objective each morning is making money. I like to challenge that. Instead, consider making your daily objective, execute my trading plan flawlessly. And that's true. Big insight for me is oftentimes I catch myself just watching the P&L, and when I get to a certain point, I'm like, take it off the table. And that's a lot of times what I will do. So I need to focus more on executing the strategy, and did I execute it to the fullest extent that it's supposed to be done, or did I just look at the P&L and say, okay, we made 50 or 60 bucks and we got out? Even though the trade was still working and everything was working correctly, we still didn't do it right. So we didn't execute the strategy right. So making money is a result of executing your edge consistently, not the goal of any single trade. That's a subtle shift, but changes how you will evaluate your day. A perfectly executed losing trade can still be a successful day because you followed the process. And that's so true. You could follow the entire process, and sometimes everything looks correct and everything looks right, but there's that 20% of the time that the trade just does not work. And that's always going to happen in any strategy that you have online. There's never been a strategy that it works 100% of the time. It's not always going to be like that. But what it does make me realize is that I'm not executing based on the strategy and following trading plan. Instead, what I'm doing is looking at the P&L, and as soon as it gets to a certain number, I get out, and that's not a good thing either. So your psychological playbook version 1, okay? We'll keep adding this over time. Okay, so revenge trading trigger is a losing trade. So I know that right off the bat. When I have a losing trade, that's a trigger for me. So warning signs, I need to make it back. The stock is moving. Can't identify the setup and feeling rushed. So what was my response? Mandatory 10-minute break and answering the 3 questions I just talked about. And then no new trade until you can clearly state the setup and why it fits your plan. Now, I'd like to move to the second issue because I suspect it's connected. Already knows. Kind of interesting, but man, I love this. I think it's working so well. We kind of got a good start with all this, and it's really working well. And you can see the power of going through this. So question 2 is, think about the last time you experienced FOMO, fear of missing out. Describe the trade you didn't take. Why did you pass on it initially? What happened afterwards? And what thoughts went through your head as you watched it run without you? Most importantly, do you eventually chase the move, or did you stay out? The answer will help us build a plan to reduce FOMO without causing you to miss legitimate opportunities. So here's my response. I passed on it initially because I wasn't sure it would work. Then it would work, and I would then think I need to get in the trade, and I end up taking the trade that doesn't work out. This would cause me to make a trade that would be a loser. So I would lose on that trade. And then the thoughts in my head were, you missed another trade. In the end, I chased the move and lost. This is exactly the kind of answer I was hoping for, but it reveals another pattern. What's interesting is that you aren't actually afraid of losing money. Big thing there for me. And that is pretty true. I'm not afraid to lose money. I'm not afraid to take the risk, but and overall, it's costing me money because of this. You already accept that losses are part of trading, and I do. I accept those. And what you're really afraid of is missing a winner. And that is true. I am so afraid of it. I see the winners and I'm like, I should have got in that. Those are 2 very different fears. Here's the sequence I see. You see a setup forming. You correctly decide there's not enough confirmation. The trade works without you. Your brain says you missed it again. Instead of waiting for an A+ setup, you try to catch up. You're late. Just as early traders are taking profit, I lose. The market didn't beat you. Your need to participate did. So me not getting in caused me to lose as a result. And that's a huge, in my face. I know that when I see it now, it's like I didn't participate. That was causing me to lose. So big deal right there. The story you're telling yourself, you said you missed another trade. It's actually changed. I'd actually change one word. Instead of saying I missed another trade, I'd like you to practice saying I passed on that trade. The wording matters. Missed implies failure, which does. And past implies you made a decision. And I made that decision to pass on that trade. Why? Because I realized that was not the trade for me. And that sounds a whole lot. And how you tell yourself that, I think, implies how you are as a trader. I passed on that trade. I didn't miss that trade. I passed on that trade. Professional traders pass on hundreds of trades every month, and they don't remember the ones they didn't take. So very important there. Here's something that may change how you think. Imagine 2 traders. Trader A takes 8 trades, and wins 6, so 75%. Pretty good. But Trader B watches 80 opportunity, trades only 2, and wins both. Who is more professional? Trader B, the best trader, are experts at saying no. And that is very true. The really good traders I know are very good at saying no on a trade and saying, I will not take that trade because it just doesn't match everything I'm looking for in that trade. The brain currently rewards activity. And that's true. A lot of times, as new traders and myself, we think that we got to be pressing the buttons. We got to be hitting the buy button. We got to be selling, buying, getting in and out. That's not true. We take the really good setups and we leave the rest. We trade the best and we leave the rest. So here's the new rule. Whenever you watch a stock explode without you, before you touch your mouse, ask yourself, would I have entered that trade if I'd never seen the move that already happened? And if the answer is no, which it is, you're chasing, no exceptions. So if I seen the move and I would say I didn't get in on the right time, because timing matters, guess what? I missed the move, no exceptions. I'm not going to chase it. And that's probably one of my big issues is I will chase trades, especially when something's really moving. So another tool, I want you to start collecting what I call professional passes. Every day, write down trades I intentionally did not take. This is pretty interesting for me because I'm gonna start doing this in my trading journal. Is writing down the trades I didn't take. So for example, when something happens, like let's say we have an opening range breakout and it dips off the lower VWAP band and it starts to go up, but I don't notice it till it's halfway between VWAP and that lower band. Guess what? I missed the trade, and that's what it is. So I'm going to do that. And is this going to be easy? Heck no, it's not going to be easy. This is going to be tough as heck, but I know I need to do this because I got to get better at it. So traders, I intentionally do not take, not because you were scared, but because you did not meet your rules. At the end of the week, celebrate those. That sounds strange, but your brain currently believes no trades equal failure. So true. If I didn't take a trade, I'm a failure. Why didn't I see the setups? Was there a setup I missed? We want to replace this with no trades equal discipline. That's what we want our brains to think. If I didn't take a trade today and nothing looked good, well, guess what? I followed my rules then. I celebrate that. I did pass the day without taking a terrible trade, maybe a B or a C quality setup, and just losing more money. Something I noticed about you. You've now described two situations here. Revenge trading, which is emotions say get the money back. FOMO, emotions say don't miss out. Both have the same root cause, urgency. Urgency. That's true. And I never would have put that together if I'd not done this, because urgency is causing me a lot of money because I'm trying to get in and get here real quick and I'm missing it. And then all I'm doing is losing more in the end. The emotional brain constantly wants action. Your logical brain wants confirmation. And that's true. When we lose our logical brain, we get into that emotional brain and now we just keep doing things. And all of a sudden we went from a so-so loss to a big loss, and that's not good. So the goal isn't to eliminate emotion. It won't happen. And that's true. You will never eliminate emotion. I read books on trading psychology, and that is so true. You cannot suppress emotion when you're trading because it just does not work that way. The goal is to make sure emotion doesn't make the decision. That is the big part. Instead, we want to use emotions to help us understand the problem. It's information to help us make better trades. And that's what we want to do. So those emotions that will help us do that. So I want to share an observation from our previous conversation. I know you've spent a long time refining your strategy, which I have. You've moved from fast small cap momentum trading to a more structured VWAP approach because it fits you more personally better. That's true because I can trade more methodically and those types of things. That tells me something important. You already know how to trade. The challenge is now consistently executing what you already know. That's actually a much better problem to have and not having an edge at all. So I have the strategy again, but I just need to fix these emotions, these issues, these psychological issues I'm dealing with. So where are we at in the playbook right now? So the second issue for me as a trader is revenge trading. So we've talked about that. FOMO is the second trigger. So watching a trade run without you, that's the trigger. So my first one was just a losing trade. My first one was just watching a winner trade run without me. A new self-talk, I passed on that trade. So I passed on that trade. That's what I got to do, and ask, what would I enter that trade if I hadn't already seen this move? And the answer is no, I would not. If the answer is no, don't change it. Don't chase it. Do not chase. Keep a professional pass log and reinforce disciplined decisions. So we're going to be doing that as well. I'm going to be putting a log together, and I want to share it on this channel. Some of these chases and at least how many I've been passing on in a week, and maybe that can help build some confidence as well towards this as I grow. So, all right, let's get into question number 3. Let's move on to taking profits too early. If you're like me, you see a trade, it's going really good, and it just all of a sudden, boom, you get out of the trade because, wow, I got money and it's starting to fluctuate, and I just want to get out and get some profit, at least have profit and give me a good feeling for the day. Think about your most recent trade where you were excited too soon. What were your original profit targets before they entered? What point did you decide to exit early? And where were you feeling that in that moment? For example, fear of giving back profits, relief, excitement, or something else. After the trade kept running, what did you tell yourself? So here's what I wrote. My goal is typically a 2-to-1 risk reward ratio. I often want to earn 50 or more per trade. My original profit target was 50, and I exited early because the price pulled back. And then it seemed that the profit was slipping away. At that moment, I felt fear. My heart started racing, and I cut my trade early to take some profit rather than another loss. As the trade kept going, I told myself that this is the best it's going to get, so I should end it now. In the beginning, something, in the end, something that idea was somehow that idea in the end something that idea was correct, and the other times the trade kept going without me. So sometimes it worked, and sometimes it was the right move, and sometimes it wasn't. The answer is probably the most revealing one yet. What I'm noticing is that your trading psychology isn't simply fear of losing, it's loss aversion. The tendency to feel the pain of losing something you already have more strongly than the satisfaction of gaining something new. In other words, before you're in a trade, you're willing to risk 25 to make 50. Once you're up 30 or 40, your brain no longer sees it as open trade. It sees it as my $40. The moment the price pulls back, your brain isn't thinking this is a normal pullback. It's thinking they're taking my money. The emotional shift causes you to abandon the plan and that plan that you've trusted before entering the trade. So basically, I'm getting out too early because I feel like I'm having a loss aversion. I don't want to lose what I've already built up, and that's so true. And I think a lot of traders have these issues. I'm definitely probably not the only one here. So, all right, here's the contradiction. Let's say your trading plan is to risk 25 to make 50, a 2-to-1 risk reward. You enter because you believe that one over many trades that gives you an edge. But but then you're up 35, the stock pulls back to 28, you exit. Notice what happened. The evidence about the trade hasn't changed. Only your emotions have. Your trading plan didn't suddenly become invalid. Your comfort level changed. That's an important distinction. The thought we need to replace. Right now, your internal dialogue is take the money before it disappears. I'd like to begin replacing it with I don't get paid for being right. I get paid for following my plan. And that's so true. I don't get paid for being right. I get paid for following the plan that I have put in place for myself to trade. And if that plan doesn't work, then I accept the loss, and that's what it is. So a practical exercise here. Before every trade, I write down one sentence. I expect this trade to pull back before reaching my target. I have to just expect that that's going to happen. Not it might, I expect it, because the reality is most winning trades don't go straight to the target. Pullbacks are part of the path. If you mentally rehearse that before entering the first pullback, it's less likely to feel like a surprise that demands action. So super important there. An important question to investigate. You said something exciting early, and was that the right decision? And sometimes it wasn't. That's true. The question isn't, did that stock keep going? The question is, did I exit because my setup failed or because I got uncomfortable? And that's a good question. Did I feel like the setup failed? Because there's a couple ways I could look at it. If I got a stock and let's say it went up, but it didn't reach my profit target, but it just started going sideways and it wasn't getting there, could I exit because it's just not going anywhere, or should I stay in the trade until I hit it? And I would argue that in that case, especially if it's gone on for like a half hour, 45 minutes, I'm probably going to get out of this trade because it's just not going. I could probably put my capital to better work if I would just get out of that trade, and just get out of it. It wasn't an emotional decision. It wasn't because I was uncomfortable. It's just because the thing's not going anywhere. So those are very different reasons. One is discipline. The other is emotional. Over time, that's the distinction that matters. So yes, one is discipline because, again, that was a good way to do it, and the other was just emotions. So a scorecard, I'd like you to use this. Instead of rating your day by dollars, rate your day, every trade on 4 questions. Did I wait for my setup? Did I or did I not? Did I enter according to my rules? Did I do that? Did I follow my exit plan? Did I follow it? Did I hit my profit target, stop loss, or was there something else like a stall or something like that that was going on in the trade? Did I follow my exit plan? And did I stay emotionally disciplined? I would say this is one of those things right here, this last question. When you can stay emotionally disciplined for days and days and days, not saying, oh, I had green days for 20 days, 30 days, 50 days, 100 days, but did I stay emotionally disciplined for 100 days? And I think that's the bigger thing as a trader. Can we stay that way? So score yourselves, what are you? 2 out of 3, 3 out of 4, 4 to 4. This helps separate execution quality from short-term and outcomes. So these are questions I'm thinking about actually adding them into my actual trading plan, and adding these into there and adjusting things a little bit, but definitely like that. So I think that is very important here. So basically doing these questions will help me realize that. Something else I'm saying, after these 3 questions, a pattern is emerging. Revenge trading is driven by fear after a loss. FOMO is driven by the fear of missing an opportunity, and early exits are driven by the fear of losing unrealized profits. Different situations, same emotions. Fear. Fear is my problem. I'm having fear. When I'm revenge trading, I want to make the money back. FOMO, I just want to get in because I missed this opportunity in the early exits. I got the profit. I got it in my hands and I want to get out. That's the problem I'm having. I got this fear. So big problem. That means we're not solving for separate problems. We're learning how to respond differently when fear shows up. One thing I'd suggest is creating a short pre-market commitment that can help you read before opening the bell. Something like, today I will judge myself by execution, not profits. A losing trade that follows my plan is a successful trade. A winning trade that breaks my rules is a mistake. My edges plays over many trades, not this one. Read it every morning before you place your first order. The goal is not to eliminate emotion. It's to remind yourself that success actually looks like before the market tests your discipline. So there you go. Psychology Playbook version 3 here. So we've talked about revenge trading and FOMO. Now we're talking about taking profits too soon. Before entry, remind yourself, I expect this trade to pull back before reaching my target. During the trade, ask, has my setup failed or am I just uncomfortable? And then finally, measure yourself on whether you followed your exit plan, not whether the trade later traded later or went further. So, all right, question number 4, the 4th and final question here. Let's tackle the last issue, holding losers way too long. I know a lot of you probably do this too. I do this, so don't feel like you're not the only one. I do this as well. So think about the last trade where you didn't stop out when you should have lost. I'd like you to walk it way through it. Where was your planned stop before entering, and what happened when prices reached the stop? What thoughts went through your head and kept you in the trade? Did you move your stop, remove it entirely, or simply hesitate to exit? Looking back, where were you hoping? What were you hoping would happen? Okay, so here's what I said. My plan to stop is at 1/3% typically of a trade, so roughly $30. I don't always close my trades, close the trade. Sometimes I still hold the trade in hopes it will turn around. To me, it almost feels like I remove the stop completely, and as a result, I lose even more money. In the end, my hope was that the trade was going to turn around and become a winner. Chris, after reading all 4 of your answers, I think we've uncovered something important. I don't think you have 4 separate psychological problems. I think we have one psychological problem that shows up in 4 different ways. So that was a mind blower right there for me. Like, I have the same issue, but showing up in 4 different ways. And I can't tell you how much that meant to me just to know, okay, yes, I see it. I see it now. You have difficulty accepting uncertainty. When uncertainty appears, your brain tries to regain certainty. That's right. I'm trying to get, when a trade is moving, I'm like, it's not doing what I want, but I want certainty, and I keep pushing for that. So here's what every situation you've described looks like. Losing trade, certainty you'll succeed. Revenge trade to erase the loss. Miss trade, certainty will miss profits. Certainty you won't miss profits. So I chase the move. A winning trade, certainty you'll keep the profits. So I exit early. And then losing trade, certainty it will recover. Hold past your stop. And I do, and I lose more money. Different behavior, same goal. Your brain is trying to eliminate uncertainty. Unfortunately, trading doesn't allow that. And so important because it doesn't. The identity shift. Earlier you told me something that really stood out. I thought I'd never make it as a trader. That is not a trading decision. That's an identity crisis caused by one trade. Professional traders don't ask, did I make money today? They ask, did I execute my edge today? Did I follow the strategy that I was planning to run as my strategy? Did I follow it all the way, or did I make emotional decisions and get out right away? Here's what I want to coach you towards. And this is huge. I don't want you to become someone who never fears. I want you to become someone who says, I fear is information, not instructions. So important. So important. Write that down if you haven't. Fear is information. It's telling you something that's going on. You need to interpret that information. It's not instructions. It's telling you information. So you need to use that as a tool to help you understand your trades better. Your fear is telling you something important. It means outcome is uncertain. It does not mean you should change your plan. And that's true. You shouldn't change your plan. You should follow the trading strategy. And did I execute it to the fullest potential that I was planning to do? So I think your stop loss issue is actually the highest priority. Very true, because it's costing me the most money. Not because it's the most frequent, but because it's one that can do the most damage. Definitely. Think about it this way. Your strategy is built around risking around $30 to make around $50, 50 to 60. The math only works if you actually lose $30 when you're wrong. If I let it go past the stop, well, then I'm losing more than I bargained for. The moment $30 loss becomes $60, $90, or $120 because you hope it comes back, you've changed the expectancy of the entire system. Even a strategy with a genuine edge can become unprofitable if losses are allowed to grow while the winners are cut short. And that's true. You're going to have a negative profit loss ratio all the time if I just let the losers run rampant and cut the winners right away. So pretty important lesson there is that I need to be better at letting the trade play out and cutting the losers fast. As soon as it's a loser, I'm out. So let's see, a new mental rule. I want you to stop thinking maybe it'll come back, replace with, if I don't take the trade right now, I shouldn't still be in it. That's a powerful question. Imagine you had no position. if you wouldn't buy at the exact price because the setup has failed, you aren't willing to hold it. The only answer is hope, and hope isn't part of your strategy, and that is so true. Hope is not a strategy. So true there. So the rule that will save you the most money, I'd actually write this on a sticky note and put it next to your monitor while I'm trading. And hope is not an exit strategy. Every time you hesitate at your stop, read it out loud. It sounds simple, but interrupting the thought pattern is what matters. So hoping I'm going to make back the loss, hoping this trade's going to turn around. Hope is not a strategy, guys. You're never going to get anywhere, and myself included, if I don't get away from that terrible habit right there. So hope is not a strategy. We take the strategy, we follow it all the way through, and we let turn out where it was supposed to turn out. So what I've learned about you. So this is going to be really interesting right here, what I'm going to be doing with ChatGPT going forward, and some of the things I'm going to be showing you guys. What I've learned about after the 4 questions, here's how I would describe you as a trader. Your strengths: you generally want to become a consistently profitable trader. You're highly self-aware, and you can recognize mistakes after they happen. You've invested significant time in finding a strategy that fits you, and you're willing to journal and improve, which many traders actually never do. So journaling is a huge part of it, and I think it's going to be some of the most valuable part of stuff you do. But my weaknesses are almost entirely psychological. You let one trade define your confidence. You measure yourself by P&L instead of execution. You allow fear to override pre-market decisions, and you trust your emotions more than your written trading plan in the heat of the moment. And that's so true. Emotions tend to take over really quick for me. So I have to figure out ways like using that circuit breaker to help me interrupt that pattern and get out of it so I don't make those mistakes. Okay, so here's the role I like to play. This is the part I want to talk a little bit about. And this, I didn't even plan on doing this, and I didn't know ChatGPT was actually going to do this. Here's the role I'd like to play. I don't want to be just another AI that answers questions after the fact. I want to be your trading psychologist and accountability coach. Did you hear that? Trading psychologist and accountability coach. So interesting here. I didn't even ask for this. I was just asking for like, hey, how do I handle these trading situations? And it did give me that. But now it wants to help me with my trading and wants to review my trades. Here's what I think how we should work together. This is so interesting. Before the market opens, you tell me the stock the stocks on your watch list, the setups you're willing to trade, the planned entries, stops, and targets, your emotional state 1 through 10. I will help you identify potential psychological traps before the opening bell. After every trade, send me a screenshot of the chart, why you entered, where you stopped and targets were, whether you followed the plan, and what emotions you noticed. I won't judge the outcome. I will evaluate the quality of your decision. Over time, we will look for patterns in certain times of days, types of setups, and emotional states that lead to your best and worst executions. Wow. That is important right there. So huge right there, guys. So going forward, I'm going to be showing some of my trades to ChatGPT to help learn more about myself as a trader. And so powerful here. And then it also came up with a trading mission statement for me. My job is not to predict the market. My job is to execute my edge with consistency. I accept that some good trades will lose and some great moves will happen without me. I protect my capital by honoring my stop, and I maximize my edge by honoring my target. Every trade is just one of the next 1,000. I especially want you to remember the last sentence. Every trade is just one of the next 1,000. So missing a trade is not going to mean anything. It's the collectiveness over time of all these trades that are going to eventually make. The mindset shrinks the emotional importance of one single trade. One red trade is no longer becoming the verdict on your future, and one missed move is no longer feels like your only chance. I genuinely believe that this is the stage of the trading you're in right now. From what I've seen across our conversations, your biggest gains are likely to come from improving execution, not finding a new strategy. And one last thought, the goal isn't to become emotionless. It's to become the kind of trader you feel fear, disappointment, or excitement and still make the same disciplined decision that they planned before the market opened. That's what consistency looks like, and that's the skill we'll be building together. I love that because ChatGPT, and whatever you think about AI, some people don't like it, some like it. I think it's got a valuable place. I think people are still trying to use it for nefarious things and all that, but I still think it has a valuable place in our society because we can have it reflect on us and do these things. And now I'm going to be working with it to try to run some trades through it and showing, hey, what did it think of my trades? Did I do the right thing or did I not do the right thing? And what is it going to help me psychologically improve on and getting better as a trader? So going forward, I actually had it create an actual just one page information guide of all the things that I've been discussing with you in the last 50 minutes here of all this stuff and basically showing you, trying to learn and put together, and it just put it in one sheet. I actually made a really nice printable one, and I actually stuck this right inside of my trading plan so I can review this before I start trading for the day and reviewing all my information. So this is hugely valuable, been very helpful. And here's what I do recommend. I recommend that you take some time, sit down and just go do the same exact thing I just did. This is going to take a little bit of time. I did this on a free plan. You don't have to have, a paid plan or anything to do this either. But I recommend you go do this, because you will learn a lot about yourself. Like I just showed you, I learned so much about myself in the last, just doing all this, putting it together, and just like some huge, just mind blowing things that I realized about myself that no one, I don't have somebody to go talk to my trading about. I don't have friends that trade. My spouse doesn't trade. I don't have anybody. So to talk to somebody is sometimes hard because we don't know somebody that trades. And if you talk to the wrong people, they're probably going to give you some shit about it and not be very nice. So this is a great way to do it. Still find people to talk to, but this is a great way to get a reflection. If you don't have a coach or somebody to train you on trading psychology, this is a great way. Now, one thing I will mention, take some of this with a grain of salt because ChatGPT can be wrong and it can get things wrong, and that's okay. It does do that, but just understand if it did make something wrong that you correct it and try to make it right. But I think everything I got here is pretty much correct. And I did make some big, just big, mind-blowing deductions from all of this that I just feel like I learned so much about myself that I didn't know, the mindfulness and everything. And I've read books on trading psychology and I still didn't learn as much as I learned in this one time, just sitting here and asking the questions. One more time, if you want to copy this, freeze the video right now and copy this and then make it match your issues. Like these are all my issues. Maybe you only deal with one or two of these issues, or maybe it's something completely different. Maybe it's a complete mindset issue. Maybe you don't think like you're worth it, or maybe there's something about how you trade that just doesn't work and something's wrong. And maybe you find out it's your strategy and not just trading psychology. Maybe you got your trading psychology great, but you don't have your plan correct. And this will help you. This framework right here will help you identify those things and tell you what's going on. It's not like somebody who's sitting in front of you and gonna just pump you up and lie to your face and tell you that, hey, you're a great trader, all that. You're actually doing it right, but not telling you, hey, there are some issues with your trading and here's what they are, this, and this. And that's really what this exercise is really meant to do, is help you identify the issues with your trading and figure out ways to make them better and replace those problems and fix them with solutions that actually work. So if you find this helpful, I definitely recommend that you like and subscribe to the channel, because I'll be talking more about stuff like this in my channel and how I do this and how I use ChatGPT to help me improve my trading. But I also recommend that you do this, and I want anybody that does this, I want to hear about it in the comments in this video. So definitely go leave me a comment, do this exercise and let me know, how did it work for you? What did you learn about yourself when you did this? And see how much it improves your trading as well. So I'd love to hear from those who are going to do that. So that's it for now. I will see you in the next video. Thanks, guys.